but no one teaches you how to actually raise capital. But the good news is you have me here today discussing this quick live on a Sunday morning, and hence we're going to repurpose this for April 21st, and ultimately, hopefully, I have 20,000 connections. There's about 130 that have RSVP'd for the event. I have about 60 that you could own a piece of the apartment or even a hotel completely passively, right? No tenants, no drama, no hassles. You can leverage the experience of the sponsors and the team. You get all the benefits of real estate without doing any of the work, right? You buy a bigger deal, which results in bigger economy of scale, which everyone together grows together, right? Bigger profit. Hey everybody, Dr. B here. Happy Domingo. We're taping this for the Dr. B show, but also wanted to be able to share this with you guys. I've done this webinar before on what would you do if capital wasn't a limitation. For some reason, I don't know, I had a little theme going here and it's not working, but let's see. Awesome. All right, so I'm going to try to share my screen. I want the entire screen, baby. The whole thing. The whole enchilada. Let's see. All right, so you should be able to see my screen. You should be able to see my PowerPoint, right? So as you guys know, we're having a Capital Connections virtual summit on Saturday, April 25th from 9 a.m. to 3 p.m. And the podcast is going to drop on Tuesday is what I did earlier in the week in regards to investing passively in real estate. So this one, it's all about what would you do if capital wasn't a limitation, being able to raise smarter, close faster, and scale without burnout. So this is live right now. I'm not expecting a big turnout of attendance. That's not the goal. The goal is to provide live content on LinkedIn and YouTube, and we're going to repurpose this for a podcast to be dropped. But I believe it's going to drop on Tuesday, April 21st, which will be a few days before the summit, right? So that's what so the webinar that I'm going to be doing is, you probably seen it on my YouTube, and we're going to repurpose this again. What would you do if capital wasn't a limitation? The only difference is the call to action is to register for the summit on April 25th, right? So a little bit about me. As you guys know, I'm heavily involved in a few deals in the Carolinas, Ohio, and Louisiana. I have over 20 plus years of experience in higher ed and financial services. I'm the founder of Elevation 90-Day Mastery, where we're helping founders, investors, and fundraisers, teaching them how to raise capital through a lot of different strategies that I've learned over the last couple of years. I also have the Dr. B Show, 2-time best-selling author for Dealmaker, how to easily raise capital for your deals. I also oversee programming for the Hispanic Chamber of Commerce, got my DBA from Walden, and I'm mentored by Amy and Sean McNichols, and of course Mike Ely, Wendy Guzman, Mika Woody, etc. And I've attended 21 WrestleManias, and I'm gonna attend my 22nd one this week, right? It's being recorded in April. So my business goal is really simple. I want to own 1,000 units in the next 12 to 18 months. I'm already about the halfway mark, and I think what we have cooking, just my immediate core team with Mike and Wendy, etc., we could get there in 12 to 18 months. Continue to build my group coaching business. I want to get into notes. I want to do work with Robert Farah more. I want to be able to be the capital partner, being able to lend out my money more. I want to write a children's book. I'm actually in the middle of that. It's been on ice, but I will make sure to do that. And then I want to take my show to the next level and own a hotel, which I've already been partnered with Ramel Lee. Ramel, shout out to you, and we're going to do it together, right? So a lot of this stuff is already cooking. So basically, how did I get to close to 500 plus units it's syndication, right? So the way we did it was they're both apartment deals, 5-year holds. There's about 8 or 9 general partners that are actually on paper the owners and help raise for the deal, and then we had about 30 to 35 limited partners who invested. For the first deal, the minimum was about $25K, and for the second deal we did, it was accredited only, so it was about $50K. So an accredited investor, by definition, is you make on average about $200,000 or $300,000 as a married couple, and or your net assets are worth $1 million, not including your primary home. So that's the textbook definition of what an accredited investor is, right? So that's what a syndication is, and that's how we did it, right? So why syndication and why the average individual should do it, right? Because owning an apartment by yourself is hard, right? But you could own a piece of the apartment or even a hotel completely passively, right? No tenants, no drama, no hassles. You can leverage the experience of the sponsors and the team. You get all the benefits of real estate without doing any of the work, right? You buy a bigger deal, which results in bigger economies of scale, which everyone together grows together, right? Bigger profit. So I'm pretty sure, have you ever lost a deal not because of the numbers, but because you couldn't raise the capital in time? I know it's happened to me a lot of times. You could drop it in the comments or in the comments when the podcast comes out. And I'm pretty sure that's happened to a lot of us, right? Right? So you might be thinking you might need a better pitch. Is it my network? Am I missing something? Truth be told, here's the truth. No one teaches you how to actually raise capital. Everyone thinks it's an assumption, but believe it or not, it's a skill, and it's a skill that you have to almost like exercise, almost like the gym, right? Where you can't just, fundraise or raise capital. It's actual skill that you have to really, it's like a muscle you have to work on over and over and over again, right? So I have invested hundreds of thousands of dollars into coaching, and thanks to that, I'm able to help raise capital from our own internal network, and other folks have approaching me here and there as well, right? So that's another story for another day. But no one teaches you how to actually raise capital. But the good news is you have me here today discussing this quick live on a Sunday morning, and hence we're going to repurpose this for April 21st, and ultimately, hopefully, I have 20,000 connections. There's about 130 that have RSVP'd for the event. I have about 60 that have RSVP'd, and my goal is 300 100. So 300 RSVP, but the most important number is those that are registered in our CRM, because those that register via our CRM are the ones that are going to get the text messages and the emails in regards to the assessment, the Zoom link, the workbook, and all that. So that's very important, that number. All right, so most people have tried friends and family, cold emails, pitch decks that are like halfway. Like I reviewed one yesterday. I was like, okay, not bad, looks good, looks like you use Canva, right? But one of the most important pieces of information is, all right, what is a minimum investment? How are you splitting it? GP, LP? Is it 50-50, 70-30? Is there a pref, right? Like there's a lot of information that wasn't on it. So I kicked it back to the individuals like, dude, you need to work on this, right? Some random networking and social media posts. Most people try that. It may work, may not, right? But why they don't work most of the time, they're not systems, and they're very scattered tactics, right? So yeah, they just like ad hoc and wing it, right? And you can't wing sales, you can't wing raising capital, right? Very important. So if this doesn't change, you're going to keep missing out on deals. Your confidence is going to take a hit, and your goals are to start to shrink. It'll be like, you know what? I'm not going to raise for this multifamily. I'm just going to like do single family. You're going to bring it down, and you don't want to do that, right? So hopefully you guys are watching this either live or will watch the podcast or listen to the podcast, and then hopefully take action and enroll in my summit, which is on Saturday, April 25th. It's virtual. It's free until Friday, until April 18th. So I've been there. I've still got ghosted by investors to fully fund and in control deals, right? So I had, as an example, I had a dozen folks that were interested in elevation. A couple of folks were ready to go and just, cold turkey, whatever, for whatever reason, are not enrolled yet, right? So it happens, right? But again, it's all about being able to connect with the right people, and hopefully those right people are the ones that are ready to take action, right? Because again, action takers are money makers. I'm going to say it again. Action takers are money makers. If you're watching this live, or if you're listening to my podcast, or if you're going live during the summit, action takers are money makers. Don't think about it. I mean, yes, think about it, but don't analysis by paralysis, right? Don't like overthink it and then talk your way out of it, right? So One individual was upset, say, "Hey, take me off the mailing list." That's fine. At least I was able to bug her. And then the other individuals, one scheduled a call, so hopefully he'll work with me in some capacity, and the other 10, we'll see, right? So I've been there before. I've been ghosted, and folks have fully funded and are in control, right? So my quick story, I come from the world of higher ed and financial services. Here's me back in, I guess, 2016, 2017, maybe 2018. There was Jaime Pardo, who works for Hudson County, Michael Smith, the former president of Berkeley, a student, and then me. So my old role, prior to me jumping into entrepreneurship, I was a director of business development for Berkeley College. So my job is we would connect with organizations and to hire students for internships and career opportunities. We're here is a career fair that we ran at the Woodland Park campus, right? I used to work at Berkeley College, right? Here's me on my last day. So interesting story. I started Borja Consulting Group in 2018 as a side hustle, doing a lot of charlas. I was talking Spanish. A lot of talks around personal branding and networking, right? And then I decided to legalize the business legally in January of 19. March 2nd, I got my doctorate. May 8th or 9th, I resigned from my job, and I decided to go all in on entrepreneurship after that, right? So here's me on my last day, posing in front of the banner there, right? So yeah, so that's how it happened. And my original plan was I was gonna keep doing what I'm doing, but also be a financial coach, right? That's how it was sold to me as far as working at Penn Mutual, but just it didn't work out. I decided that at the end of 2020, I decided to just be a broker. I saw now I'm brokered with a couple of agencies, and if someone comes to me for insurance, I have a couple of go-to agents that I send them to, right? And I decided at that point to go all in on my business, and that's how I was able to land, work with the Hispanic Chamber and then other clients after that. Here's me with my family during the graduation back in 2019. Emma's almost grown, almost up to my chest, and then here's my daughter who's big and my wife who's hiding behind there, right? So my story of real estate is very simple. I purchased my primary home in 2014, and then 2 years later, I wanted to purchase a multifamily in. I looked into Allentown. That was going to be the town I was settling in. I was supposed to get an approved loan for 75 grand for a 3 unit, and it wound up being that for some reason, the bank kind of backed out at the last second, say, "Oh, the ratios," and this was at the time of Trump's first election. I don't know if that had to do with anything, and then I couldn't find a lender, right? I probably, hindsight 2020, I probably could have either done two things. I probably could have done a hard money loan and then eventually find someone to do the traditional financing, or what I should have done, knowing what I know now back then, is probably raise the money. But I didn't even know you could raise money, right? So that didn't happen. I kind of fell through. So after that, it was dormant. The idea was dormant for a couple of years, and then in 2021, 2022, a now ex-friend approached me in regards to trying to get into multifamily. So initially, we wanted to do stuff in the Northeast, but the numbers didn't work out. And I at the same time, I was like, look, I didn't feel comfortable Northeast, and I needed to educate myself a little bit more. I can't just dive into it because I know. Obviously, I know how to look at it from a business standpoint. I understand revenue, expenses, net profit, net loss. I understand the ratios. I understand balance sheet, cash flow. Don't get me wrong, but analyzing real estate and specifically multifamily is a whole separate issue. So in 2023, I decided to join a mastermind, RPM. Shout out to Amy Majiri, Sean McNichols, and I was able to understand the game, the raising money game, and raise it and understand the ratios and financial ratios and all that. So here's me with Jerry Harris. I was looking at a multifamily in Memphis, right? I decided to focus on that asset class because that's originally what me and the former friend had agreed on, right? So this was I believe a 32 unit in Memphis that we had put under contract, and when we went for the inspection, it was it was a lot of work. So we told the guy, you have to come down on your price because face it, if we were gonna go at it at the price that we were gonna offer, it was gonna eat into our profit. So our goal was to bring it down to like, I think we offered 1.8, and with all the work that we estimated, it was like $1 million. So we wanted the seller to come down to like a million or 1.1, and he wasn't budging. So I walked away. We walked away from the deal. So the only thing I lost was, I didn't lose my EMD. I did lose like $1,200 that the attorney took because it was an administration fee for the check and holding the EMD, whatever. And that guy was, the seller was busting our chops. Actually, the broker was busting our chops with the EMD. For some reason, that was red flag number 1 and 2 because my, I guess, former friend, he was supposed to be the money guy, and I was going to be the operations guy. That was red flag number 1. So which leads me to this, right? And then, I would say May of 2024, we were supposed to close on the 6th unit, and I was going to be the operations guy, right? Looks like I know what I'm talking about. And he was going to be the money guy. Closing day came, and for whatever reason, did not have the money, and I had put down the EMD. The game plan was I put it down. He was supposed to reimburse me for the attorney fees and for the EMD. None of that happened. So unfortunately, I lost most of the EMD and the attorney fees. So I got back some money, but I didn't get back everything. So I was at a crossroads. The seller was upset with me. He said, if you could raise it, it's yours, right? I'm kind of raising it, but I still didn't want to do it. I had someone look at some additional information, and it was almost like it was meant to be that I did not acquire this, because a couple of months later, the hurricane kind of wiped out most of this area anyway, right? So lesson learned there, right? So be very careful as far as who you do business with. And then I decided at the same time earlier in the year, I decided to partner with I enrolled in Mike Ely's mastermind, and here's why I did it. So I learned the game in 23. I got some people that I still talk to this day. Don't get me wrong, but I wanted more. I wanted more multifamily. I wanted more knowledge, right? Because trust me, when underwriting multifamily is a lot different, than anything else, right? So I decided to join his mastermind. I shopped around at a few others. I liked Mike's because he was very approachable, very down to earth, and I still talk to him to this day, right? So I joined his mastermind. June, I went to the summit. I did a retreat, which gives me an idea for a future retreat in the fall. And after the retreat, I was like, I'm in, I'm sold, I'm done, I'm in. So thanks to that retreat, I was able to really skyrocket and really be an inner circle member of the mastermind, and then really take off and able to be a part owner in this bad boy. So I was able to help raise money for 2 deals. This is the deal that I sort of spearheaded. So here's me and Mike Ely here in Southern Pines, North Carolina. It's a 52 unit, and it's a value add. I believe it's 5.5 all in cost, and I believe by the time it's over, it's all said and done, it should be worth $9 million. I believe we're gonna make $1 million at the end or something like that, I believe. So fantastic. I went from, as you can see, nothing, right, to losing 16 grand in that deal in Florida, in Madeira Beach, to now being a part owner with Mike Ely. How crazy is that, right? So shout out to Mike, right? And here's us. We were doing some videos and some post promo stuff, and here's Tim Best, Nevia Van Wright, and here's Wen, and here's Mike and me, right? So that is my story, right? And here's us recently. Earlier this year, we were at a summit and this is Mike's hotel in Columbus. So Mike Ely's a man, love him to death. And here's us. We were doing a networking event that, on the evening of the final night, right? So it's crazy, right? How life takes you, right? So I went from nothing to now being able to have Mike, and he owns over 2,000 apartments, and he has over apartment units technically, and owns, I think he sold 2 hotels. He had 4, and he sold 2 hotels, right? So here's a little success story of Nadia, who, as you guys know, she spoke at the second Capital Connections Virtual Summit, and I met her through the Hispanic Chamber, and she's a graduate of our entrepreneurship program. So she was stuck as far as BD, outdated brand messaging, plateaued in sales, and thanks to working with me, clarity on the offering, strategic action plan, confidence and visibility, her revenue grew, and on top of that, now she's flying to Florida. We're doing, she's partnering with some great people, and I believe she's also raising capital for a deal. So, this is straight from her. I feel like I'm on a fast track to growth. Elevation is a real deal. Dr. B's coaching helped me move faster and grow smarter. It's 100% worth the investment. The clarity, connections, and strategy you walk away are game changing. And I talk to everyone to this day via chat that is part of Elevation, and I think I'm actually going to take it to the next level, and we're going to do a school community as well, right? So, love it. Here's Raphael as well. Capital raising uncertainty, scaling hesitation, limited networking, confidence gap. The solution was we got capital raising strategies, a scalable system, networking, and actionable, right? He was able to raise, for his flip, develop a repeatable capital raising system, expanded his network, and increased his clarity, confidence, and deal making skills. So he had one property, no clear plan for funding for his next deal. Elevation is a game changer. They gave him the strategies, network, and confidence he needed. By the end, he closed on the second property and created a system he could use again and again. If you really want to grow your portfolio, Elevation will give you that blueprint, which is true. And he's so busy, I haven't even heard from him in a little bit, and I'm sure he's working on a few things now. So now that you heard my story, now that you heard the story of other folks taking the program, so what if capital raising or what if capital in general didn't feel like a grind? What if it came to you on repeat? Right. So here's what you're going to learn today: why traditional capital advice fails, how to rewire your approach, my 5C capital confidence framework, and how can we build it together. Right. So most advice fails because it focuses too much on the pitch. There's no positioning. You're not building relationships. That's what it's all about. And there's no trust. Right. So broken belief number one is you need rich friends or a big following. That's false. You need a system, not status necessarily, right? Number one broken belief. Get this out of your head right now. Broken belief number two. If you pitch harder or louder, you raise faster. Pitching repels. Positioning attracts. And having the right systems, the right process, the right deck, that's what attracts, right? And the right relationships as well. Cold DMs and mass emails are enough. Trust isn't built in a spam folder. Real capital is relationship driven. Okay? It's relationship based driven, right? Broken belief number four, systems are for big teams. Systems are how you stop doing things alone. That's not true, right? Systems could be for any team. Systems are how you grow, right? And broken belief number five, networking show up everywhere. No, you can't have random presence or strategic proximity. You have to be already where the capital flows, right? So attend those conferences, attend those events that are related to either capital raising or related to where your ideal client would be at, that you could help connect with those individuals in order to raise money. As an example, right? You have a lot of financial advisors that focus on specific niches, right? They help dentists, or they help lawyers, or they help freaking, I don't know, business owners, right? So you'll join those dental related associations, and then your talks, your marketing, your messaging will be all around how you help save as far as taxes, or strategies to help save on taxes, or strategies for savings for dentists, right? So you have to be where the capital is already there, right? So what you actually need is credibility, a clear investor story, right? I spoke about this during my class on Friday, when I spoke about the micro story and the power sentence, right? I actually do this exercise during the Capital Connections event, where you're drafting an investor story, right? Because people love stories, right? And it's all relationship based, and you want to have repeatable capital systems, right? All right. So at this point, hopefully you learned a little bit about me, learned a little bit about raising capital to an extent. Now I want to show you the 5C capital confidence framework and how that could help you. So number one is about connecting, having strategic positioning or proximity. when it comes to being introduced versus being ignored, right? So you can use LinkedIn a lot when it comes to trying to accessing your ideal client, or again, attending those conferences where your ideal investor or client is located, right? Clarity, crafting your capital story for trust and traction, and making sure you have that right power sentence, that right story, that right message, so that it resonates with someone and say, huh, you know what? He knows what he's talking about. Or she knows what she's talking about. I need to connect with him, her, or they, right? Convert. So from that casual conversation to commitment, right? So I actually need to, I spoke to him finally in January. I didn't have his email, but I need to, as an example, someone that I met at a networking event wound up investing in the deal, and now he's about to get PISAID later this year, right? So it went from a casual conversation to investing in my deal, right? So frameworks that close without pressure, right? And then the last piece is you close and clone, right? So again, as I present to folks, as I train others, again, if you're talking to your ideal client and if you're asking the right questions, right, and at the end, you should have little to no objection at the end, right? So, as an example, whether it's a certain budget range or certain pain points that certain people have, if those folks can afford you, right, and if they have those same pain points, there should be little to no objections at the end. And if there is, you could just practice and then write down what are the common objections that come up, and then you'll able to at that point then be able to handle those objections. Again, it's all about having that CRM setup. I use my event as an example. Everyone that enrolls into Capital Connections Virtual Summit gets a text message, gets an email, and then they'll get a drip campaign as we get closer to the campaign, to the event. There's going to be a lot of automation to follow up, and then you clone that process over and over, right? So again, just to recap, connections and being introduced versus being ignored and being in the right rooms, right? Clarity, crafting that story, kind of what I spoke about to my students on Friday. And then we're going to do this story more in depth during the Capital Connections Virtual Summit, converting, from casual conversations to commitments. So again, having a CTA when you're at these events, having that power sentence, that micro story, that elevator pitch, and then how to convert that into a CTA, call to action, and then that's how you go from casual conversation to commitment, and then closing and cloning, right? Being able to handle objections, having a CRM. I use Go High Level. You could use HubSpot. There's a lot of other ones, right? And then how to have automation and follow up as well. So your sources of private money. So how you could be able to attract and get that capital is through 401ks, old 401ks or IRAs, HELOCs or home equity, right? Trust funds, savings, personal business lines of credit, inheritance funds, life insurance, HSAs, personal business credit cards to an extent, and then stocks, and then VC, angel investors, private equity, and or family office, right? So a lot of folks get the two confused, but they're both starting to marry a little bit between venture capitalist and angel investor. So angel investor, typically wealthy individuals who invest their own personal capital. VCs manage pools, right? But you're starting to see that kind of blend more. Angel investors tend to invest in earlier stages. VCs tend to be at later stages, but now you're starting to see that bleed together, right? Angel investors typically smaller investments. VCs more large sum. Well, again, that's bleeding together. Angel investors are decision making more personal, subjective versus VCs more structured and rigorous, right? That's not. I mean, this is what I define, right? But I think it's all there's due diligence for both, and then angel investors provide mentorship, and VCs not as much, but strategic advice, right? So that's the difference between the two. So just to recap, your sources of money could be 401k, IRA, HELOCs, trust funds, personal savings, personal business line of credit, inheritance funds, life insurance, credit cards, and then stocks, venture capitalists, angel investors, private equity, and family office, right? So, what family office basically means is it's individual who manages financials on behalf of a family or an entity, right? All right. So has it been valuable? I think it has been valuable, right? I think up to this point, I was vulnerable and shared my story again, able to share my 5 C's again, and was able to share with you how to break those broken systems down again. So has it been valuable? I think so. I think it definitely has been valuable, and definitely drop it in the comments as you watch this, either this live stream or the podcast, right? Coming up April 21st. So can you see how these strategies can give you an unfair advantage when it comes to raising capital? I think the answer is yes, right? No doubt, 100%, right? If you could play a greater role in personally helping you raise capital next deal, would you want to learn that now? I would suppose so, or hope so, right? I just gave you a taste. And imagine Capital Connections, April 25th. It's going to be insane. You're going to love it. It's going to be fantastic. We have Sandra Naomi Torres discussing personal branding and marketing. We have Randy coming back discussing AI when it comes to raising capital and risk mitigation. We're going to have a panel with Carol Guevara and Boyd Karen. We're going to have Kirk Jimenez from Brickell Capital. It's going to be a fantastic panel on debt financing. We're going to have Robert Farah discuss the notes and discuss how you can leverage that piece when it comes to debt financing. I'm going to be speaking on walking the bridge. I have some fantastic exercises planned, as always. And yeah, man. And then you're going to have an assessment at the end. It's going to be awesome, 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 right? So imagine that. So imagine in less than a couple of days from now, a couple of weeks from now, let's say you're connecting with the right networks, right? AKA Capital Connections. We're able to help you craft your capital story, how to really raise capital on demand, and have a system that does that work, right? So I want to introduce you guys to the Capital Connections Virtual Summit, kind of what I just mentioned before. You're going to help build those $1 million relationships, learn to use the 5 C's, turn those conversations into capital with proven follow-up and deal-ready systems, right? That helps you with growth, referrals, and revenue. You're going to master magnetic networking, right? Raise more capital confidence and also expand that visibility, right? And you being the trusted advisor or authority, who turns every conversation into cash flow and collaboration, right? So that's a little bit about that. So what's next? So now that you hopefully was able to watch me either live now on Sunday morning or listen to the podcast, I know it's somewhat dated. It'll be dated. It'll be short, right? And what's next? So if you're ready to master capital raising, it's going to happen Saturday, April 25th from 9 a.m. to 3 p.m. free with the code MONEY. And that is free until April 18th. That is the website, and that is the QR code. You could scan there, right? So amazing opportunity for you to learn about capital raising, the 5 C's, and everything I just mentioned, right? The marketing, right? The personal branding, the AI, the debt financing, the pushing you out of your comfort zone when it comes to the text messages, messaging, and messaging in general. You're going to be raising money on this day. So love it. So I left it on the screen on purpose for like 30 seconds. So we have the opportunity to scan it, and it's free with the code MONEY. We have about 130 who have agreed to attend. 60 have RSVP'd officially for the event. And, I'm probably going to cap it once I definitely get to 125, 150, right? So please, please, please register now. So very quickly, I get a lot of these questions often. So Q&A. Who is the Capital Connections for? Is for individuals that are founders, fundraisers, or investors looking to learn to raise capital or want to learn about accessing capital, through debt financing as well. Okay. How quickly can you see results? It depends, right? I'm going to give you the attorney answer. It depends on your business model, depends on how fast you take action, right? For those who take it past April 25th, who either get into elevation or try to get into a deal, right, through debt financing, or we have a further discussion regarding more of an advisory role or even invest passively. It all depends. So it depends on the situation. How is this different from other programs around networking? So raising capital is all about building relationships and not just networking. So I incorporated what I learned in the first book, what I wrote in the first book, plus what I wrote in the second book, which has now created a high-ticket group coaching program, which now I'm I'm partnering with a couple of folks when it comes to debt financing, and now I do I could do high end advisory work stuff, right? How much can I expect to raise? Again, it all depends on your network. It depends how you work it, right? Again, you almost like the gym, right? So just because you sign up as a for elevation or inquire regarding accessing the capital, whether there's a line of credit or a loan, or just because you sign up, you have me as your advisor, it doesn't mean it's a guarantee, right? You have to put in the work, right? So if you put in the work, if you listen, do the work and get the results, right? It's either as simple as that. Is it only for real estate investors? That answer is no. Although I do come from the world of real estate, the concepts that I teach come from the world of real estate. The asset at the end could be different. It could work for tech or health tech, or anything, right? Because the concepts that I teach necessarily is industry agnostic, right? I had someone the other day, a couple of weeks ago, we were going back and forth, and he didn't realize that I knew him. He thought that he was just going to that I was just a freaking jabroni in this thing, right? I don't want to call him out on it, but it was a gentleman who I had met in Miami, ironically, at an event, and he was like, "Oh, that it's a lot different. Did you ever do anything in regards to um, did you do anything in regards to tech, or did you do anything in regards to VC or whatever, blah, blah, blah." Bro, I'm telling you right now, the concepts that I teach, although I come from the world of real estate, it works for any asset class. So whatever. Once I told him that I knew him, I think he backed off, right? Because if I see him in Miami, I'm gonna we're gonna butt heads, right? But it's all good. So to answer the last question, is it's for although it's for real estate, although I come from the world of real estate, it works for any asset class, and a lot of folks that are coming to me now are coming to me in that from that tech or SaaS world, right? So yeah, so it could work for anybody. So hopefully this was helpful. And again, it's free until April 18th. I think it's worth investing your time and energy and money into this fantastic event. I'm excited. The first Capital Connection event, we had about 20 people, but there were a lot of in and out. We had about 8 or 9 people live at a time, so it was very hard during the week. Once I moved it to that Saturday, we had about 30 people, 30, yeah, 30, 32 people at its peak, and then we had about 20 people in the afternoon session. So I expect, and that's with a lot less people officially enrolling through Go High Level. So this time around, we're almost tripling the number of folks that have officially registered. So I expect at least, no exaggeration, about 70, 80 people live on Saturday, right? Of course, it's a numbers game, right? So 300 people RSVP, 150 actually RSVP officially, and then you cut the number in half. So it's a numbers game. So I expect about 75 people live, right? And out of those 75 people, I expect about 10 to 15% to take action after that, right? Because not everyone, I wish, right? 75 in a room, 75 wants to do business in one shape or form. So out of those 75, probably a little bit more. I'm probably optimistic about 20% will take action. So hopefully I get to see you and Capital Connections on April 25th. And I would say, in addition to that, I'm very excited for you guys in regards to um, the event on April 25th. If you need anything, you know where to find me. You know how to connect with me. Thank you for listening on this Sunday morning. Enjoy the rest of this beautiful day for those in the Jersey area and those around the country. And hopefully that was helpful. So this will live on LinkedIn. This will live on YouTube as well. And we're going to repurpose this as a podcast as well for April 21st. Alrighty. Well, thank you so much. Have a great day. Take care. Thanks. Bye.